used car current market view. I'll do that by looking at listings and shopper count and volume that we're seeing in the market. So we'll go over that. Here we are, the first week of May. I want to give you a kind of perspective of what to look at over the next 30, 60 days and see where your inventory is sitting. Because again, that one day old car will be 60 days old in July 4th, right around that time. So let's talk about it. Again, tariffs is just kind of all over the place. We don't know the total impact of that. I don't think we will for another 4 or 5 months till we run out of non-tariff type cars, at least for most inventory as far as a major, at least on the domestic side too. So, but let's talk about used cars, what we can control. Now, a couple of weeks, about a month or so ago, I did a video and went over how we're seeing actual retail pricing drop. And what I meant by that is the percentage of market. Dealers are getting more aggressive. Margin compression's going down. So there's been headlines, obviously, February, March was strong, and dealers had some good April with the tariff stuff happening, pulling customers forward, meaning that there's a lot of business that happened in April that might have happened in June and July. And so we'll have to see how that pans out. And so with that, though, dealers are replacing a lot of vehicles, wholesales running in the 60% as far as sale rates. And so, and what's out there is really kind of that higher dollar stuff. So the average price of a vehicle going up could be multiple reasons. It could be they're not going up as much as the cheaper cars are leaving the market, and what's left is the higher dollar stuff. People at Cox or Car Gurus or something can answer that for you. I will share a screenshot from Car Gurus because I want to kind of back up what I see the next, 30, 60 days are going to be. This is a time that you're going to want to be lean and clean, not overbulked with your inventory, meaning you want to be carrying your to your 2 weeks old cycle, meaning if you have sold 50 cars in the last 2 weeks, that puts you on pace to sell 100. That's about where I'm going to be carrying my inventory level. If I got 100, let's sell 100. You want to do that with profit, okay? And right now, every dealer is kind of struggling. The shopper count's gone down, and I'll show you that. Our average dealer now is selling about 90% of their inventory, or 45% in 2-week window. But the disciplined dealers are keeping it clean. And so we'll go over kind of the cause and effect of that also. So let's go take a look at what's going on in the market. What I'm going to do is share my screen. So if you listen to this to a podcast, which you can, switch over to Facebook or YouTube or something to watch this, even LinkedIn, to watch the data points that I'm going to point out here. One of the things I'm going to do is I go here and I'm going to share this. So the first thing that I want to go over, again, what we'll track is a couple things. The inventory levels, for example. How many used cars were listed year over year? Okay, so at this time last year, and let's zoom in. I'm going to zoom in real good on this one here. This time last year, May 6th, okay, we captured 1.46 million used cars on AutoTrader and 1.178 on cars.com. 1.46 is now 1.48. 20,000 more cars, 24,000 more cars. Cars.com went from 1.178 to 1.197. So they also have 20,000 more cars. So directionally, there are more cars listed online. Okay. Now, let's look at Shopper Index. This is, again, Google Trends, people looking for used cars nationally. This time last year, it was trending at 85 out of 100. This time this year is at 81. Year over year, that's a 4% drop in shopper activity. And if we take a look at the peak, which was March 9th, 2 months ago, it was at 100. So since March 9th, we've had a 19% drop in shopper activity. So what I'm showing you right now is there's less shoppers looking at more cars. Okay, that's not debatable. That's the numbers. That's not my numbers. It's AutoTraderCars.com and Google Trends. And the other aspect I could show you is this is Car Gurus. Okay, Car Gurus. We're going in there looking at the last year versus this year price. Yes, the average price is trending up. What it cost for a consumer to buy a car right now, as far as the average listing price out there, is higher, and it's been going up. but the price to market's getting lower. A dealer had a car priced at 98% of the market. It didn't matter if it was a 20 grand car or 50 grand car. When they were at 98% of the market, a week later, that 98% turned to 100%. That meant the market retail dropped 2% on that car. And so the dealer had to adjust. So even though the average price has gone up, and again, does that mean some of these cheaper cars have cleared out and gone away, causing, because look how low the average price got right here. Okay. It got down to 26 grand. Now it's back up 2 grand. What is it at? 27.7. But here's the kicker. It's still lower than it was this time last year. Okay. 28 grand. So even though pricing has gone up, what it costs to buy a car right now, there's a more aggressive price point dealers have to get to on these cars because of the lack of shoppers and the availability still high. Okay. It's where it was last year. But notice what happened last year. The prices dropped. Okay. And by August, they dropped over $1,000. Okay. We went from, again, 28 grand to $300, 27.7. It went back up before the end of the year, but then all dropped all the way down again, down to this 26.9. So the average price is trending up, but it's still right here 1% lower year over year. There's more available and less people looking for them. Okay. So what does that mean? Well, we go in here and we track. The red line represents the shopper index that we capture from Google Trends. And again, that shopper index drops off. But the green line is our dealer's 2-week volume drop off. So March 11th was the peak of our dealers' 2-week sold percentage. It was 55%. That means our dealers were selling 110% of their inventory beginning in mid-March. Since then, it has dropped 10%. Okay. And again, that's March 11th. Well, let's see what happened last year. Last year, March 5th, it peaked at 57. Okay. So the previous year, last year, dealers were selling about 2%. Or in a 2-week period, so about 4% more inventory in that March peak. But what happened after that? Well, it dropped down through April, which we've seen. It's dropped down through April. Okay, here's their May 7th, 46%. Again, we're at 45 right now. But what happened after that, rolling into July? Remember July 4th, I said that 60-day-old car is going to, or that 1-day-old car is going to be 60 days old, July 4th. The shopper index dropped all the way to 40%. So, or the dealer's volume dropped all the way to 40%. Okay, that's a 6% drop from May. From May, 46. So May, June, and July, by July holiday, July 4th, the volume dropped another 6%. So my point is, if things fall the same, which could be worse because, again, there's more cars, still haven't solved the interest rate problem, negative equity problem. My assumption is the shopper index is going to drop, okay, as it continues to do every year, which is going to make our dealers' volume drop another 5 to 6%. Okay. So that's the stuff that I'm going to keep an eye on. I'm going to stop sharing this. So, a lot of times dealers want to hold out. They want to hold tight. Don't drop too much. We don't know what's around the corner. There's hardly any cars available. They're going for stupid money. I got to pay a premium for these, so I don't want to give them away and lose money. Okay. Well, customers don't have to do anything. They don't have to buy anything, right? Interest rates are still at a higher rate. The cars, a lot of people bought a lot of cars, in the COVID hangover there. And these cars that they've owned for 3 years now, they might not have the equity to get out of them yet. And again, the interest rate comparably, even if they could get help, might be a way higher payment just on interest alone. So that's the state of the market right now. And what I'm telling you is stay clean. Okay. The best way to make the most money on a car is when it's fresh. So do you want to increase or decrease the odds of it selling while it's fresh? You want to increase it. I'm seeing too many dealers raising their prices because, again, they see the average price of cars is going up. It doesn't mean the price to market's going up. Dealers are dropping their prices to stay aggressive to keep their inventory moving. So what I want to do is I want to be that buyer in July. right? When everybody's down, they've dumped these cars they overpaid for, they're stuck in them. I can be a buyer in June and July because I'm clean, I'm disciplined, I don't have aged inventory. I can be buying cars a grand cheaper in June or July than the guys were buying a couple months ago. I get the price at a grand more aggressively than them, and I'm making money, right? I get to be able to make 1,500 while they're losing 2 grand. Okay, so I want to be able to be a buyer in current market situations, get this inventory moving and get it clean. Okay, and then manage your leads based on the inventory situation too. Don't just manage leads based on the age of the lead. And that's kind of where we come in. We put these two worlds together in one platform. Matter of fact, I'm going to share my screen real quick on that. If we happen to have a large pickup truck problem, let's clear out the large pickup trucks. Let me go ahead and share my screen. So again, if I go into I'll just go right here into Lotpop. There's a demo dealer here. But we take an inventory feed from your inventory tool. Doesn't matter, vAuto, VinQ, Max Digital, First Dealer's Link. We'll take that data, put it in here, and then in a click of a button, here's your leads on those cars. I can see how old the lead is and when's the last contact date. Okay, and so what our tool does is a great job of keeping that inventory moving. We found any particular issues. This dealer is 10 units off pace. They're negative 10 units to hit their goal. Okay, they're only selling 36% of their sale rate. So where do I find those 10 units? Well, let's find them in their 17.5 to 20 grand cars, or their Chevys, or their compact SUVs, right? We're 10 units off on compact SUVs. We got 36 in stock. We're only on pace to sell 26. Increase the sell rate here. We score out the cars to figure out which cars have a lot going against it. We have a predictor to predict where this card would leave at price to market based on your data. You can see your lead data in here. They only have one lead on this, but guess what? They have 13 people in their database looking for an SUV around this 18.5 price point. So not only do you just have one lead on this car, we're giving you 13 opportunities to get off this car before they drop the price. Price should be the last lever. But if I have a problem with compact SUVs, if I happen to have any leads on these cars, how often would I want to call and email these leads? Well, every day. Well, good luck going into your CRM and say, hey, give me my leads on my compact SUVs or my Chevys or my 17.5 to 20 grand. Give me my compact SUVs and the 33 of those the 33 leads where the car's still in stock. Let me call and email those leads, right? So I'm going to go ahead and stop sharing. So that's where we kind of come in and help you find these holes to keep that inventory moving, because again, that one-day-old car that you just don't want, that you're not necessarily worried about right now because it's not aged, will be aged by July. And I'm telling you, based on historical sales trends. Now, we all know what's going on in the current administration. He could pull something out of his back pocket like Elon does with Tesla, wake up one morning, say, I'm dropping prices 10%. He might throw out some cash flow clunkers program or something, and that throws everything out the window. But guess what? I'm still lean and clean. No matter what gets thrown out the window, I'm disciplined enough to stay consistent in processes. And that's, again, what we do. It's make sure you got processes on purpose and an actionable game plan. So if you like a demo, go to lotwalk.com. Hope this tip was helpful. We do have a Lotpop University coming up May 14th and 15th. Go to lotpopu.com, lotwalku.com. Go to our website, look for events for Lotwalk University. Sign up free for anybody. We're going to go through these metrics that you need to track and trend. It doesn't matter if you're a client or non-client. Clients can send them and they'll get some education on how the tool sets all this stuff up. But again, it goes back through all the basics that we wrote in the book, the WTF book. All these charts and everything are in this book too. Okay, go to workthefacts.com and check out, again, all the metrics that you need to track your inventory. I got it on there for $12.95, I think. 5-star rating, 4.8. But if you look, it's a 5-star rating. Look at any other book in there for the auto industry and see what kind of ratings comparably are. We got great reviews, great book, good content. Give me a call or email if you'd like to get a demo. Just message me. I hope this tip was helpful.